What's up, money magnets and master traders? Hope you guys had a great trading day and attracted a lot of money to your P&L. For your P&L, get that green P&L. SPY dropped down, it gapped down and hit that 20 daily moving average, going as low as 654.4. I had a level around 655, a fib level. It was definitely some buying pressure there. You can go to the 15-minute chart. We can see that that level around 655 was hit twice on the day, and twice they failed to give us an official breakdown on the 15-minute chart. That's usually what I use for my breakdowns and breakouts intraday. Decent trading day, plenty of volatility, level to level moves. I wrote here gapping down from yesterday's close. If it's bounce time, 658.5 and 660 must clear. Bulls couldn't do it, but I did write if 657 fails, extremely bearish with 655 and 653 in play. We broke down that 657 level and only managed to hit 655. The next candle at 9:45, it back tested that 657 as a resistance, showed strong selling pressure, and the bearish follow through would have been to break down 655. As you guys can see, it did not, and instead we had ourselves a false breakdown setup. We'll recapture it intraday. This is all alerted in the group. I wrote here 657 lost and 655 smashed. That was a very fast move. But when we had the false breakdown, 657 recaptured, I wrote 655 held, 657 cleared, nearly hitting the higher targets. So I'm giving intraday updates throughout the day, but that did recapture right there. Hit 658.5, and it was some chop. 657 managed to hold as support, but it failed to hit that 660 level. I had a 660 target. It went and hit the 659.4 level, got close to it, but didn't quite hit it. But I noticed we was bear flagging intraday, so ourselves a nice bear flag. We needed a breakdown of 658.5 and 657, which we got, and it was all alerted in the Discord. I wrote here, not really a rug hole, but it is a bear flag breakdown with 658.5 loss, put in 657 play. I'll trust the breakdown more if 657 is lost, put in 655 and 653-ish in play. As mentioned, we couldn't get to that 653 level. 655 was a bit too much, and then at the end of the day, we went back, bounced, and got back above 657. The market makers was really drawn to that 657 level like a magnet. But why? Well, we go to the daily chart. Based on my orange trend line, that is where my 657 level is from. This area was tested as both resistance and support. And today you guys saw that it was 657 was like the equilibrium level for the intraday action. With that being said though, I'm liking this doji. Some people may have liked today's action, some people may have not. But seeing this doji, that always tells us chop. And how do we trade chops? We identify the chop range and we watch for the breakout or the breakdown. We're prepared for either scenario. So let's keep this simple based on the price action. 659.4 is the high for the doji with the low at 654.4. Anything in between that range is chop and noise and should not be taken too seriously. But if we want to be bullish, that is the level we need to see clear for tomorrow. 659.4. I do have a level at 660. You can reference that one, or 659.4. Either way, we can take out today's high tomorrow or gap above it and take out, recapture the 662 level and the 664 level. We are bullish again. Allow the price action to tell us what to do. But either way, if we break the high of today's doji, we are bullish, and I would favor at least 662 and 664 testing. I don't know if we can get to all-time highs or new all-time highs. We'll take it one setup at a time. But what I'm going with, we take out today's high, we can head back higher. But if we are to be bearish, 657 level is important. This orange line is sloping up though. And for tomorrow, it will be around 657.4-ish. And below that, I have 656 and today's low at 654.4. If we can break down those lows, especially 654.4, then the pullback continues. That'll break us below the 20 daily moving average, which would be very bearish. Because breaking down the 5 DMA is bearish for the short term, but breaking down and staying below the 20 DMA, that's more bearish for the medium term. Definitely something to watch out for. Either way, we have the levels and setups. One more time, above 658.5 and 660. we will favor more upside. I'll be bull biased again above 662 and below 657.4 based on the orange trend line and 654.4 based on the low of the doji. I would be bear biased on SPY. Here is QQQ, much lower close than it did yesterday, closing around 593.4ish. I do have support at 592.6, 591 in the 589ish area. That is a fib level. So if we want more downside, gotta break down those levels. I would be bear biased below 589. If it's bounce time, 594 and 595.5 fib level must recapture to send us back up to 597 and 598.5. Above 598.5 fib level would put us back above the 5 DMA, and that is when I would be bull biased on QQQ again. NVDA gave us a very nice bounce intraday, but it back tested my 180 level as resistant and found some strong selling pressure, and it still managed to close below the 5 daily moving average. The bulls going to still have to clear 178 and 180 tomorrow, which they failed to do today. But they still have a shot to be bullish if they can clear those levels above 180 is what I need to see to be bullish. Right now, the bears still have the edge. They just need to show some bearish follow through by breaking down 176 and the critical level at 174. They almost did it today, but they failed. They went for the back test of a critical resistant level instead, which held. Now they need to show follow through and take down the support levels at 176 and 174. Below 174, I would favor another $6 to $10 move to the downside. Here is Tesla. Finally got the breakdown of the wedge. If anybody traded Tesla today and you made some money, congratulations. That was a very nice move. I am bearish on Tesla as long as below the 426 level right now. Not only broke down the wedge, which was around 432ish, but we broke down the 426 level, and as long as below those two levels, I would favor more downside. And if 420 fails next, I think we can drop down to 415 and much lower, all the way back down to the 405 to the 403.8 area. Keep in mind, we do have a gap that's yet to be filled around 396-ish. With this breakdown, is looking a little bit more possible. Bullish again only if the breakdowns, today's breakdown, get invalidated tomorrow, because yes, false breakdowns do happen from time to time. And if they do, it's traded unbiasedly as well. But I will say, if 426 and 434 recaptures tomorrow, because this orange trend line does slope up, but 426 and 434 are the two main levels that the bulls need to recapture to turn things bullish again for Tesla. But right now, as long as below 426, I'm going to remain bearish. IWM flirting and battling at the 20 DMA as well as the 238 fib level. If tomorrow those two levels fail, this is going to be a lot more than the gap down. It's going to be a lot more downside incoming with 235.5, 234, 232, and 230 as the next target. I will trust no bounce unless 241 and 242.5 can clear and recapture. I'd be bullish again above 242.5, because then that would put IWM back above the 5 DMA. And that's when I'll be bullish, when the price is above the 5 DMA. Speaking of bullish, Apple is still above the 5 DMA. Gave us a pretty weak breakdown yesterday of that 253.4 level. It was decent for a level to level move, but this showed no bearish follow through today. It recaptured 253.4, smashed 255 as well as the 256.6 level. It even gave us a close above. So as long as above 256.6, the breakout is intact, and that will keep 258, 260 or much higher in play. As usual, Unco needs to see price at the very least below the 5 DMA for me to be bearish. Today, Apple had the opportunity to make it happen, but they didn't. And now that moving average has sloped up higher, and it's around the 253.4-ish area. If that level fails, that is when I would be bearish, with 252, 250.8 in play, 249, 247, and 245 in target below. I would be bear bias below 253.4 and 250.8. Otherwise, we are bullish above. And last but certainly not least, here is the VIX continuing to melt up a little bit here. That's a good sign for day traders and people who love volatility, trading level to level style. So let's hope the VIX keep on going. As long as it's above 16 is a good sign. Hopefully it can hit new levels. 17.37, 18.14, and 19.38 are my next targets. If the VIX drop below 16, Uncle just may be disappointed. Let's hope not though. Anyways, and that's my price action analysis and price action plan for all my favorite ticker symbols that I love to cover and trade, especially the SPY. I hope you guys found value in this video. Peace. You guys are still here, but it's over. All right, you guys want a little bit more content? I'll give you a little bit more. This is the dark pool level. I love the dark pool levels. It helps me decide whether I should be bearish or bullish. And I said in yesterday's video, when SPY closes below the dark pool level with the highest premium, or it stays below it, it's usually bearish. And when it closes above the dark pool levels and stay above it, it's usually bullish. Well, we're looking at 657.88. That came in at 2.9 billion in premium. Keep in mind, there was 361.8 million in premium at the 657.89 level. There's literally 1 cent away. So in my opinion, around that area, that's about 3 billion in premium. And where did SPY close today? Well, it closed at 658, just a little bit above it. And then we also had a good amount of premium, 1.2 billion in premium at the 661.19 level. SPY closed below that. So it's a little bit bullish looking because SPY did close above the one with the big premium, 657.8. So I'd be bullish, maybe favor a relief bounce if SPY can stay above that level, and if SPY can clear that other dark pool level, 661.19, be a lot more promising for the bulls. But keep in mind, we know where the dark pool levels are. If SPY is below these levels, especially 657.8, that would be very bearish. Very bearish. All right, guys, I love y'all. Peace.